Hey everyone, this is a trader investor. In this video, I'm going to talk about Forex. Specifically, I'm going to focus at the three levels of Forex that it goes through. It goes up 3, comes down 3, goes up 3, comes down 3. And within those big moves of 3 that happen on a weekly basis, with the reversals on the way down, there's also smaller moves of three levels within each day. Each day has its own 3 levels. Now, the markets do not move up 3, down 3, and end up the same place that they started week over week. We know Forex price changes over time. So at times, you'll see that it will have 3 moves and come back 2 maybe, and then start a new move of 3 in the opposite direction. Sometimes it will have just 2 moves and then do 3 moves in the opposite direction, and then do a 3 move up in the opposite direction again. So all of this drives what? Price. There's nothing else that drives prices. The markets move and they create price, and we do a lot of price actions. We don't need a lot of indicators. I'll use one in this example, and I'll show you how and why I use that indicator. Basically, what we want to do is the market makers, they make a move. So we want to catch the market maker move, MMM, market maker move. That's what we want to catch. And we want to see what the market makers are doing. And they tell us what they're doing. They stop hunt high, stop hunt low, and take the price in the direction that they want it to go. So what they're trying to do is trap unsuspecting retailers, wipe them out, and go in the other direction. As they go in the other direction, the retailers that have it right, but they also wipe them out because the retailers get in a little too early and they have their stops at the wrong place, so they get wiped out. And I'm not suggesting get in early, because those stops would be extremely wide if you get in at the wrong time, if you get in too early. So I'm going to show you proper entries for our trading. And in my chart, you can also already see what I'm suggesting here. So the formation that we are looking for, once price has moved down 3 levels, a bearish movement, pullback, bearish, whatever you want to call it, then our entry is a W. We want a W to confirm the trend reversal. And there's specific ways on how we look at W. We're going to look into that. And then once a W is confirmed, a W is equals 2 V's. That's just for me to remember that once a W is confirmed, to have the 3 moves up, the 3 levels. Level 1, I form a V, an entry. Level 2, I form a V, an entry. Level 3, I expect the M. I expect the opposite side, the reversal. So same thing with the reversal. Once we have gone up 3 levels and it's time for that reversal to happen, we enter at an M. And what an M is 2 lambdas, right? It's the 2 upside down V's, but in Greek, lambda, so easier to remember, the 2 lambdas. So what that reminds us is level 1, lambda, level 2, lambda, level 3, complete. So these are the turning points we want. We want the, in a down market, we want some strengths to come back to weakness, and we enter at those weak moments. Same thing in the reverse side. As price is driving with strengths, we want some weakness, a little bit of strengths, and then that weakness continues. That's what we're looking for. So if you remember, W is 2 V's and M is 2 lambdas, 2 V's upside down, makes it easy to remember our entries. Why this is important is once we have W followed by a V followed by a V, I am not entering another V. Even if the market maker wants to take it to level 4, level 5, level 6, level 200, I'm not entering another V until I get a clear indication that we've formed an M, we've reversed, we've pulled back enough, and we're going to resume that price to the upside. So now that we have this context, the other very, very critical thing to remember is we have specific time of day we will enter these trades. If these don't set up, we don't enter them. What we want to enter is the best of the best. We want to be extremely picky. We want to get the best of the best entries. And we're we'll go for either a day trade of about 50 pips. If we're at level 3, I'd say about 25 pips, but you know, about 50 pips for a W or an M entry or a level 1 entry. Or if we want to swing it, we can go for about 75 pips to 100 pips, depending on what the charts are telling us. So those are specific ways that we are going to enter them. And every time price moves up 25 pips, we want to make sure we are trailing our stops, because we don't want to give back gains because we see we're targeting 75 pips and price goes to 74 while we're asleep, and we come back and it's back to -5. We don't want to see that. We want to be able to capture all of our pips as much as possible, and if we don't get to the target, we have a stop at least 25 pips away from that target. So at least we're capturing in that 74 move, we're capturing 49. So that's the idea of a trailing stop. So our entries, we'll talk about our entries. They're specifically either at the London session or at the New York session, and even that at the beginning of those sessions, not towards the end, specifically not towards after lunchtime New York session. Once New York session is in lunchtime, which means about 9 a.m. Pacific time, which is about 12 p.m. Eastern time. Once that happens, there's no more trade. I don't care what kind of signal it gives me, there's no more trade. In the Asia session, I don't enter trades. And I'll show you why I don't enter trades in the Asia session either. So what we're looking for is either the low of the day formed and we're moving up, or the high of the day is formed and we're moving down. And that high of the day could also be the high of the week. The low of the day could also be the low of the week. So we are looking at the Aussie dollar right here. And for example, on April 28th, it formed the high of the week. This was the high of the week and price went down. So this was a clear indication that that was the high, and when we're trying to enter to the downside. Of course, I'm showing you the 4 hour for us to see which level we're at, and then we use the 15 minutes for our precise entry. These are going to be sniper entries. You will see that some of these entries have 6 pips stop loss, but for spread and for any just manipulation, I like to give at least about 10 pips of stops, and 10 pips of stop with 50 pips of target. That's 5 rewards for 1 risk. So that's a fantastic risk reward ratio right there. So as I mentioned earlier, sometimes they move in 2 levels and they're done, but if you look at this space here, it's actually 3 levels, even though it looks like 2 levels. So price came down, it consolidated, came down, consolidated, came down, and it got done. So be looking at these levels, not at, oh, it has to move 100 pips or 200 pips. No, it doesn't have to move that way. It just has to move, consolidate, move, done. That's how they do it. And the reversal on this one only moved once. Maybe if you look at the hourly chart or 30-minute chart, you might see some levels of 3, but it only moved once. And what the market makers have decided is they wanted to see a high formed here. What they were doing, they were actually, this was quite interesting, anybody who wanted to go long here, they were stop hunting. Stop hunting meaning they would go up there, grab that order to go long and stop them. That's what they were doing. So that's why I don't trade breakouts that easily. And I have specific rules on how I trade breakouts, but this is what they did. The highs, somebody would say if this high breaks, I'm long, they were taken care of immediately. So that's what I'm trying to help you avoid. in these tradings. So once these highs were made, and you can see my entries I said are M's and W's, you can see clearly an M here. You can see an M here. We're going to precise entries again. We're not trading off the 4 hour. 4 hour for me is a little, on Forex especially, very difficult to enter and manage risk significantly. It's possible. You can trade off the daily, look at the weekly or the monthly chart for confirmation and do the dailies. Everything is possible, but for me, I prefer to have tighter stops. And you know, if I can capture 50 pips on a standard lot, it's great. And you don't have to capture 150 pips at a time. Once you master this trade, increase your lot size. If you're doing nano lots, go to micro lots, right? If you're doing micro lots, go to mini lots, go to standard lots. And once you go into those lot sizes, your gains are going to be significant. And you know, one lot, 50 pips, that's $500. So if you are able to do 5 of those, you know, 2 times a week, that's a significant gain. So don't focus on, oh, I must capture this whole move here showing me. Nobody can ever capture anyway this whole thing. Nobody can capture this whole thing. Nobody knows what this looks like. This is a 1000 pip move, right? So nobody knows this, right? So you can't know this. So somewhere in here, catch those 50 pips every time. If you're trading off the daily and 4 hour, of course, I would expect you to go for more than 50 pips. For me, that's 15 minutes, 50 pips. So on a 4 hour, I haven't studied it because that's not what I am recommending, but maybe you go for 200-300 pips on a 4 hour. But again, why not just do 15 minutes, increase the lot sizes, and then be done in a shorter period of time? You don't have to babysit your charts, your trades. You can go on your other business, come back the next day and repeat the cycle. So that's the idea. So we're going to look at all these pairs that I have up here. We're going to look at each one of them. So Aussie dollar made its 3 move down last week, and it's in a reversal. I'm expecting that reversal for the next leg up. So that's what I was looking at. And so from the 4 hour now, if we go directly into the 15 minutes, what we want to see, and here's where the Asia session comes into the picture. The orange vertical line you see is my Sunday line. So every week on Sunday, I form an orange vertical line. This just tells me it's just a visual thing. Here's Sunday, and here are the next 5 trading sessions for that week, and then repeat, right? Rinse, repeat. That's one. The second one, the white box area you see is the Asia session with the highs and lows marked. As soon as we get out of the Asia session and get into the London session, then that white box ends. And what I see and what I expect, 3 levels down, I'm expecting a move up from here for the next 3 levels. So what are my entries? W or M for reversals, and V or lambda for continuation. And at continuation, my recommendation is after level 2, do not attempt to enter level 3. Even though I gave you a target of 25 pips at level 3, level 3 sometimes moves 5-10 pips and it's done. So that's why I don't like entering at level 3. So what am I looking for? Asia session forms, it's a consolidation. They form the high and low of the day. This is where they want to trap retailers. And so then they went for stop hunt low. What that means is anybody who had gone long in these areas, they are short, they are stopped out. Anybody who saw, oh, there's a break of this area, I'm going to go short, immediately the next bar took care of them. So that's that manipulation. So In Asia session, this is where they form the tight consolidation of the day. So that's one. After that, because I'm looking for long, I'm looking for a W formation. The W formation, you can look at it in two ways. The bigger W, 1, 2, here, and enter. So that's one way of looking at it. So you have this, you have this, you have this, and this. That's one way of looking at it. The other way you can look at it is, I want that W inside my session. So you have this here as well. So either one is accurate. And my blue and green boxes are the London and New York sessions that are acceptable for me to pull the trigger. If I see something in the green box, that's for me. I don't trade the London session. That's midnight for me. That's just too late. I'm in bed. So I'm not looking for those entries. I want to look for an entry at the New York session. And they both give us signals. They're both huge market moves. They will give us signals. There's a lot of liquidity in both sessions. So I'm not too concerned about missing out. So in this instance, when we see that the low was spiked and they reversed it and we have the W formation, so this is where we enter. But before we enter, that W is not enough. There are two things I want to see for me to get a good confirmation that this has some strengths and this is going to give me the move that I need. This is really critical to look at that. And what that is the two things I look for. One, I want to look either at a pin bar, just like this one here, or railroad tracks. Railroad tracks meaning down bar, up bar equal, or the up bar, the bar in my direction is much greater than the bar in the opposite direction. However, if that bar in my direction is more than 3 times the size, I skip that trade because I feel like the move is already made. So in this instance, you can see there was no pin bar made here. So this was not really a good entry. But the last one here, what they did was they, stop hunt low. They created that first leg of the W, and as they're making the second leg of the W, meaning the bigger one that I drew earlier, this is where they have this railroad tracks, and this was a good entry. This was a good entry because we know once they have cleared this, once they have gone to this area twice, they're out of there. They are out of there. There is no pain for you once they do that. So once the institutions, the market makers, that's why I call it the market maker move. Once the market makers start their move and they're out of there, then you have no pain. You have a safe entry and you target your 50 pips. Now, because I like to exit that same day, if I don't hit 50 pips, I have either trailed the 25 pips, or in the New York session, when the green box is over, I'm exiting. And if you're trading the London session, this is critical because sometimes some of the moves will happen during the New York session. Like in this instance, if we look at this entry here, if we look at this entry, 50 pips is way up there, so we never got to 50 pips, but we got to about 40 pips, right? We got to about 40 pips in the New York session. So if you had entered at the last bar of the acceptable range in the London session, meaning up to 3 a.m. New York time, from midnight to 3 a.m. Pacific time, from 3 a.m. to 6 a.m. New York time, if you got into that range, if that's what you're trading, great. You're trailing it and make sure that you either have a very tight stop or you're exiting when your day is over. When you go to bed, you don't want price to reverse on you. I'm not saying it will, but it is better to be safe and lock it that way. So London session, they got the W, they entered. New York session, for me, this is where my entry is. This is where the V happened, right? This is where the V entry happened, and this is where I enter, and I'm targeting the 50 from here because this is level 2. So I'm targeting the 50 here, and I also have a tight stop here. But in my case, because I like to get out at the end of day, even if I catch second leg in the New York session, I'm exiting when I started to see this double tops and it's not penetrating. So I'm exiting. I'm not giving it any chances. But if you want to protect 25 pips and wait, great, because we don't see a lot of gaps midweek. Usually gaps happen on Sundays. So it's okay if you say, I'm going to hold for this to happen. All right, so this was the entry for Aussie dollar. Now, before we move on, I just want to draw a couple of things for you just to make the charts clean and acceptable as well. So what is a W? What is an M? So this is the standard W, acceptable. This is another variation of that W, higher lows, acceptable. This is another variation of that W, lower highs, acceptable. They're all acceptable. What you want to look for, especially in the third instance, is, are these lows lined up to the previous day low, an order block, something similar to that? And if that's the case, then you are safe to have this entry here at the W. And so if we look at the M's, it is very similar again for the M's. It's the same thing that we look for. You have your standard M. You have your standard M, so equal highs. You have your not standard M, which has lower highs. Lower highs always is a good thing when you want to go bearish. So that's, you have this. But then you have the higher high M as well. Again, this is acceptable if this is lined up to some previous high, some previous structure. Because what could happen is, if you have a wick here from a month out or 2 weeks out, they will break out from above that but close below here, because what they're trying to do is trap these folks who want to go long. They want to trap them, and when price closes below this line, you have your inverse pin, you're off to the races. So this is why I wanted to draw these three types of M's and W's for you, so that you're not looking for, oh, it's not a perfect W, I'm not entering. No, that's not the case. It doesn't have to be perfect. You just have to get the concept, and they give you a variation of how that looks, and you take that variation. So let's go to Euro. When we look at the Euro, for me, looking at the 4 hour first, looking at the 4 hour, 1, 2 move, and the third, I'm expecting either a third move, or I'm expecting a reversal, a reset, and when they reset, they might reverse. So that's what I'm looking for. And so considering the W, VV, or M, lambda, lambda, during the London session, I did not get a W. I did not get a W that is clean. I also did not get a W with a railroad track, or a, if you can tell me this is a W, but at the W formation, I don't have a pin. I would have liked to see this much longer here, not this long, but much longer. I would like to see a pin or a railroad track in this area. We got this railroad track, but that was, you know, if you look at this as a W, we just started that, you know, we haven't even started the second leg of that W yet when that railroad track happened. So that was not an entry. And another thing that I will use to confirm is if I want to go long, I want to see my oscillators also make higher highs and higher lows. I want to see that happen. And in this case, it did happen, but I did not get a pin or a railroad track. And as I stated earlier, we choose the best of the best for our entries. We are very picky because all we got to do is one 50 pip multi-lot trade a week and we're good to go. So be picky, be extremely picky. Do not just date any trade that comes to you. Date the type of trade that you want to date, right? I'm just using this analogy because I want you to be extremely picky. So London session, no entry. New York session gave us a V, if you want to call that a V, but this, to me, this was not a clean railroad. So I just didn't feel this was clean enough for me to enter. So I did not take this position. It just wasn't there for me. London was not clear in what direction it wants to go. And if I say this is the other thing that I thought about is if this is move 1 and if this is move 2, if I take this trade, my move 3 could end here. So this was just not satisfying. So I wanted to see either a move 1 pull back and move 2 pull back. Then I could try to go for that 25, 35 pips for move 3. But when move 1 and move 2 were tied to begin with, I was not prepared to enter a position, which, you know, looking back, proved to be the right decision. So let's go to GU, GBP USD, the pound. So in the pound, similar to the euro, I did not get a good W. If we look, let's start with the 4-hour chart, 4-hour direction. So for our direction, we have one big move, and then it reversed today. But what does that mean? It means we missed it. We missed it, but that's perfectly fine because we're not going to catch all moves. And here there was no clear direction. 1, 2, and they were reversing in some fashion, and then 1, and then it was reversing. So looking at this, I was not very comfortable to enter a trade to begin with. And then moving to the 15 minutes, there was a stop hunt, but then there was no W formation because this is a reversal. We were coming from up, so I need to see a very clean W. There was no clean W. A V was not an acceptable place for me to enter. So then on the daily V, I don't usually enter the daily V. What I want is, I think the AUD gives us a good example of what I mean by that. So if I'm in level 1, then I will see a V, I will take it for level 2. I see a V, I might try to take it for level 3. But within each 2-3 bars, which represents, you know, those 15 minutes daily ranges, if I see a move of 1 to 3 level already happening in a short period of time, then this is not somewhere that I'm comfortable to take a position on. As, oh, this is level 2, let me hurry up and get in, right? So I'm not in a hurry to make those entries based on that. So this is, for me, is the beginning of level 1. This whole thing is level 1, and I want to see a V now here during the blue or green sessions, meaning the first 3 hours of London from midnight to 3, or New York from 6 to 9 Pacific times. These are Pacific times that I'm specifying. So please convert them to your time zone. As you can see, this is the time zone that I am using here. So the pound did not give me a clear indication of an entry, therefore I skipped this entry. So moving to the Kiwi. The Kiwi, this is 4-hour chart. So 4-hour chart, short, followed by another short, followed by another short. So I'm expecting a reversal at this point. This is my expectation, is a reversal, because we've already had our move of 3. As you can see, the moves of 3s do not match point for point with all moves of 3s, because you'll have big moves, smaller moves of 3s, big moves, smaller moves, bigger moves, and then bigger moves down. So we're not necessarily going to start and end the week at the same value. So my expectation for the Kiwi was to go long, and that's what happened accordingly. However, in the Kiwi, my expectation was right, the entry was right, but it was during my bedtime. So I do not have this entry. What entry am I talking about? So my expectation is to go long. I formed a W. I have the railroad track here. So let me erase that one and replace it here. I have the railroad track here. This was an entry for the long position. Because it happened in my nighttime, there was no entry for me. Because I'm expecting this to be level 1. I'm expecting this whole thing to be level 1. But within level 1, the smaller level 1, 2, if I'm expecting this to be level 2 here, but this did not give me a good entry. It did not, for me, it did not just come back to a good zone, because I was kind of treating this whole zone as a consolidation. So I did not see a significant, stop hunt down here for all the people who have gone long here. I did not see them hunt that, and so this was not clean for me. So that's a pass. That's a pass. So here's why I'm doing all this analysis and live in my head, that you can see why. I could say, oh, I entered here, I gained here, but that doesn't help you, because the true entry is how I'm thinking about it, right? So I don't want to enter this trade unless I see them go for these stops, hunt these stops, and reverse them. And so I want to see a clear indication like that. So that's my entry. So no entry in Kiwi. So USD CAD. In this 4 hours, we were in this zone. For me, this zone is, I don't know what the heck is going on. So I don't even have to go to the 15 minutes. I don't need to trade this, because I have no idea what phase we're in. Are we in this consolidation? So, 1, consolidation 2, consolidation 3. Is that what we are doing? I have no idea yet. So as a result, I am not trading this USD CAD yet. So of course we got a beautiful M. Anybody who disagreed with me and said no, this is consolidation to go down, here's our beautiful M. And in the London session, we have almost like a pin followed by a strong engulfing bearish bar. This is an entry. That's fine. I don't agree with that, because I still think we're inside that consolidation, and when we're inside the consolidation, my target 1 is somewhere here. And does that even give me 50 pips? I have no idea. And do I even want to take that chance to go from here to here 37 pips. You see, that's why I don't like these kind of trades. I want to have a clean indication where price is going. If it's not clean, I'm skipping that trade. Let's go to the Swissy. So looking at the Swissy, we've had some strong move to the downside. We're continuing to the downside, and I could see there was a reversal here. So this reversal leg up, and now if I see another reversal leg 2, I would go long. This was my expectation, but in this expectation, when Sunday opened, was there a clean V or W? Yes. So if you wanted to go long, yes, but for me, no entry, because that engulfing, the railroad that I want, the engulfing that I want after the W is formed at the second leg of that W. Two things that are wrong with this specific setup. One, it came in late. Even if I was trading the London session, it came in late. Two, this bar is more than 3 times the size of this bar, which means the move is already done. When I want that 50 pip move, this move is already done, which doesn't help me. So that's why there was no entry. And aren't you glad there was no entry? Because New York session proved us to be the opposite side. So it was not very clean to begin with, and that's why there was no entry. And when price kept pushing down like this, then it is better to be safe. Now, one thing you can look at is during the New York session, they pushed price down very quickly, and anybody who had gone long here, they got wiped out, and they ended the day in consolidation. So tomorrow we could see a nice W formation and we could go long. But again, Swissy is not the best of the charts, so that is what happened. Now let's look at JPY. So JPY 1, 2, 3 levels, right? So you have the 1, you have your 2, you have your 3 levels. So my expectation is to the downside, and that's why we go now to our 15 minutes chart, and what we're looking for is our M or W. So we have our M formed here. We have our M, and at the rejection of the pick, which anybody who's trapped to go long at the break of this line here, everybody was trapped to go long. At that line, I'm already happy to enter here. If I was awake, this is where I would have entered, but I don't enter because I don't see a clear indication. But this was the entry for you. I'm showing you all of this so that you can compare for your future reference. When you get an M formation and you're expecting price to go down and it gives you a clean, yes, they wiped out some stops, and the market maker is giving you this. It's a fantastic move. You see how this this lambda is formed? This is a beautiful lambda. However, I did not enter this because for me, when this signal was given, I'm still not full operation mode yet. This is 5:15 for me. So before 6 a.m. I'm not in operation, right? I am taking care of my soul, my spirit. I'm cleaning up, and that's all I'm doing during this time before 6 a.m. So this trade for me is a no-go. Anybody can say, well, this break here at this low gave you an opportunity to enter. This was a big bar for me, so I've already missed this significant move from the London session, right? This is level 1 of the London session. This is level 2 of the London session that has started. And if I enter here, could this have been the level to complete this consolidation, and this is level 3? that is a possibility. So when I look at that possibility, I'm not entering this. So everything that I'm not entering that goes the right way, I can show you 100 examples where it goes the wrong way. From experience, this is why I come back to this and say, if I see this is more than 3 times the size of this, I'm not entering, because in my view, a lot of times the moves are complete when you see this kind of bar. So that is USGJPY. When we go to GJ, this is a very, very wild pair. It moves, and it moves very big. It moves significantly, and a lot of times people don't have the proper stops, and because they don't have the proper stops, they get wiped out. So here in GJ, this is the pound yen. I am seeing the 3 levels are done. So level 1 down is done. I'm looking to make level 2 price movement. And so in level 2, what I was looking for is an M or a W formation. So in this case, because I want to go short, I want to see a nice M formation. A nice M formation that has happened, but there were 2 things that are not really clear for me. If you are in the London session, there's no trade for you because that M did not form. In the New York session, that M did not come early enough, but for you it might have come early enough because it's 8 AM for you. So you get this price rejection. You might risk it and say, I'm going to enter anyway. This is fine, but for those of us on the West Coast who have a day job, who don't want to get up at 4 in the morning, I am saying, if the signal was not given to you during the New York session when you are ready to go, then there's no trade. And, did you miss anything? No, not really, because all price did was, after it formed the M, it went into consolidation. So if you're really eager about this trade, so our entry was somewhere here. So anywhere here, if Asia session gives you that entry, you can say, well, it's the same entry as here. And if you look at your stop, where's my stop? You have a decent stop here, so you can try it. You can try it because this stop here is about 12 pips or so. 12 pips or so to make 50. But are you saying this gives you a clear indication? Maybe, maybe not. But for me, it was not clear enough, because like I said, I wanted to come either in the London session the first 3 hours or the New York session the first 3 hours, 6 to 9. This is where these hours are primarily based on the banks, not the retailers, but the banks that are exchanging sessions, right? They have trade desks. They have multiple trade desks. And so when one session ends and they hand over to the next session, to the next trade desk, these are the hours that they're having their conversations and exchanging. So London, 3 a.m. between midnight to 3 a.m. Pacific time, somewhere in this range is where they're exchanging their ideas and what they want to do. And then in the New York session, somewhere between 6 a.m. and 9 a.m., all these in Pacific time, this is where all those exchanges happen. Where the trade desks, the institutions are having their conversations to where they want to take the price. So based on that information, this is why I have set it to this zones. And if I get a signal outside these zones, I am not entering a trade. So there was no trade for me in GJ. Looking at EJ, let's look at the 4-hour. Looking at the 4-hour, let's adjust this. So 4-hour, we're looking at, again, a downward movement. Reversal has happened last week Thursday. So if we say we're in level 2, we're as part of level 2, where are we in level 2? This is what I want to look at when I look at the 15 minutes. So there was one thing you could look at. This was actually a very interesting trade for London sessions. Here's why this was interesting. You have here, let me show you this. You have an M formation. Remember, M's don't have to have equal highs. So you have that M, or you could have this M here. But since this started here, that started here, you have this M here. Now in this instance, this high is here. These highs here are not equal. Therefore, you can say, okay, here's an M. These highs never broke these highs. So if you look at that, and then now, based on that information, you have this bar that did not break those highs, and that immediately reversed and engulfs that bar. This was a very good entry if you're looking at multi-session M's. So I always look at these multi-session M's, but for this exercise, I just wanted to show you to have an idea to look at them. But outside of that, we did not get a good M here. We don't have an M, we don't have a lambda to enter. Therefore, there was no entry here. Neither New York session nor London session gave us those signals. So that is something we don't have. Pound Aussie, the Pound Aussie, if we look at the 4-hour chart, I have no idea what's going on. There's no entry for me, because this is a lot of sideways action over multiple days, not just multiple sessions, but multiple days. Over this whole week, the last part of last week, and including today, there was no action. So there's no trade for me in Pound Aussie. Aussie Yen, looking at, we had a reversal, and then I'm expecting some sort of reversal, but again, this is not, for me, this is not a clean chart. So because, you know, down, up, so is this level 1, level 2, are we in level 3? And this is not, you know, and is level, or are we in level 1 of a new uptrend? That's also a possibility. So when I'm not clear on this, I skip the trade. I'm 100% wrong sometimes by not taking trades, but at least I have my cash protected, because I could be wrong also. So that's why this is no trade for me. And so the last one I want to look at, Euro, there's two, I'll look at two. So yeah, Euro Aussie, same thing. We're in a tight range, no entry for me. So nothing to look at further than the 4 hours. Here, we had a strong move over the whole of last week. So I'm expecting price to reverse here. This is my expectation. So in CAD Yen, I'm expecting a reversal. And so for that reversal to happen, I need to see an M. Boom. There was an M given during the London session. You got a beautiful M during the London session. You have your railroad tracks. and it's time to enter. And further confirmation, if you want to use the oscillator, when price is making higher highs, the oscillator is making lower highs. This tells me that the price is going to go down. There's a divergence, right? That they're not agreeing. Therefore, I am very comfortable taking this trade during London session. Or you get your lambda here, but when you got that, one, it's outside the 6 a.m. time frame for me, and two, I'm not getting a clean pin or a clean railroad tracks. I'm getting one big multiple bar engulfing, which for me, because it's more than 3 times the previous bar, is a skip anyway. So here I'm looking for another opportunity. If we say this is first move of that downplay, I'm looking for another opportunity to go short again when they do another stop hunt high and reverse the price sometimes tomorrow. So this is basically how I'm looking at the market structures at the 3 levels, the market level moves, stop hunt high, stop hunt low for an entry, W formation, M formation, or follow through of those, V formation or lambda formation. This is basically what I'm looking for to enter my positions. And I have my 50 pip target, 10 to 15 pips stop. But I'm hesitant to give a number on the stops because it is all about the high of where they spiked for short positions, or it's the low of where they spiked for the short positions, for the long positions, right? So if you're going long, where did they spike low first? That low minus few pips is your stop. If you're going to go short, where did they spike high first? The high plus 5 pips or so to go short. That's how I'm looking at it. All right, everyone, this has been a long video, but it's been long on purpose because I wanted to show you multiple examples on how this thing works. Don't forget to like this video. Don't forget to encourage me to keep doing some more. And if you have a specific questions, whether it's Forex, crypto, or futures or stocks, it doesn't matter. If you have any specific questions, I'm happy to answer them. Just let me know what you're looking for. And as always, have a great day, great week, and make some green and protect your profits. Take care, everyone.